Hello everybody and welcome back. This is Swati Gupta, Chartered Accountant. In this video, we will be discussing about IFRS S1 and S2 recently introduced by ISSB. Let's understand what is its aim, why it has been introduced, when it has been introduced, and is it compulsory for everybody. Also, with the help of example, I'll let you know what are the exact disclosures that are required. Okay, let's dive into it. So firstly, if we talk about the names of IFRS S1 and S2, okay, it stands for general requirements for sustainability related financial disclosures, and S2 stands for climate related disclosures. These are both addendums and requires some extra disclosures. These have been introduced by ISSB, International Sustainability Standard Board. This International Sustainability Standard Board is a regulatory authority, is a regulatory body, okay, it is a part of IFRS Foundation. It is a part of IFRS Foundation, and ISSB takes the entire responsibility. In its entire work is to provide a global baseline, okay, that a universal baseline that everybody should provide at least these disclosures, okay, regarding sustainability and climate. Now, what is sustainability? That means, for example, they want to let the user of the financial statement come to know that, okay, whether they are using clean energy or non-renewable energy, okay, whether they are dependent upon clean energy, okay, renewable energy or non-renewable energy. Just the user of the financial statement should come to know that, okay, because of this company, what is the damage that is being created, that is being is any environmental damage created, is our environment getting damaged because of any activities, how much is its rate, in the long term will this company survive, or if this company continues to work in this manner, then it might damage the environment a lot, and thereby it might be a possibility that the company won't be able to sustain for a long time. Okay, sustain means being there into the business for a long time. So is it a vision with a long term? Is it possible for the company to run for the long term or not? Is there any crisis that the company might end up, I would say, winding up, not sustaining, not surviving into the, I would say, society, market, just because of damages that they are creating? So simply they have to provide disclosures, and ISSB has provided some guidelines that, okay, these are the minimum disclosures, these are the minimum headings that you need to provide as part of your disclosure. Coming ahead, okay, quick things. What is ISSB? ISSB stands for International Sustainability Standard Board, and these IFRS S1 and S2 have been introduced on 26 June 2023. What is the aim? The aim is entirely to provide a global universal baseline so that everybody provides clear disclosure regarding sustainability and climate issues. Sustainability is written under IFRS S1 and climate is under S2. It simply provides an investor, okay, with the information by which the investor can assess the upcoming risk, opportunities and impacts on the enterprise value. In case if it is not sustainable, the company might wind up, okay, it might be seized because it is not working properly, it is creating a huge damage to the environment, it is not conducting its CSR activities, it is not using its renewable energy, etc. Now the question arises as an accountant, okay, that when to apply, in which companies we are required to provide these disclosures. Okay, now the question is it compulsory for all companies or is it specific? We'll talk about S1 and S2 separately, one by one. Now, firstly, is it compulsory? No, it is not compulsory. It depends upon the jurisdiction. It depends upon that particular country's jurisdiction. If that country says that particular disclosure, IFRS S1 and S2 are compulsory, then only that particular company in that country is required to provide disclosure regarding that IFRS S1. Otherwise, it is optional. Got it? But it is highly encouraged that companies should provide on voluntary basis the IFRS S1 and S2 disclosures, but it is not compulsory. It depends upon the jurisdiction, the country's laws. Okay, it entirely depends upon regulations of that country where the company is listed and where the company is being operated. If we talk about voluntary, then voluntary adoption is allowed. Also, adoption by regulators. Sometimes some countries are accepting it and are reviewing it, IFRS 1, as a potential framework. They might include it into the framework. They might provide its applicability as a structure, okay, as a compulsory structure. So IFRS S1 is being looked at, is being reviewed, okay, by the regulators with as a potential upcoming framework to improve sustainability reporting and investors' decision making. However, it is again, I'm highlighting that it is not mandatory yet. Talking about IFRS S2, again compulsory nature. No, it is not again compulsory. It depends upon the country's jurisdiction. It depends upon the law of the country. Okay, if that country says if this particular disclosure is compulsory, then only we'll apply. Talking about voluntary adoption, definitely it is highly encouraged. Okay, investors are expecting, and thereby it is highly encouraged to apply this particular IFRS S2 disclosure requirement, that is climate related disclosure. Okay, companies may choose to apply IFRS S2 to align with investors' expectation and meet the demands on for the more transparency on climate related issues. So again, in practice, if we talk about listed companies are generally applying these S1 and S2, and specifically the companies which are engaged in highly sustainability risky business. Okay, if the nature of business is highly sustainably risky, which creates high impact on environmental, might create high environmental damages, thereby like energy, mining, etc. These are specifically, okay, appreciated, may be required by national regulators or stock exchange to compulsory apply IFRS S1 and S2. Talking about voluntary reporting, now again, it is not compulsory, but it is highly encouraged. Many companies adopt these standards voluntarily to enhance ESG. ESG stands for very common and renowned word, which is environmental, social, and governance. Okay, these are the three pillars of ESG. ESG stands for environmental, social, and governance. Governance to meet the growing demand for investors for robust sustainability disclosures. Now, it is said that the company works in a society and thereby society also has an expectation. On the other hand, if you could relate it with CSR activity. Now, in case if a company is emitting pollution, then the company is required, okay, is expected to compensate for that air pollution damages, and thereby they are required to provide at least 1%, 2%, 5% of their turnover, okay, as CSR activity investment. They might plant trees around. Okay, they might help in any listed CSR activity, corporate social responsibility activities. So here also it is saying that the company has responsibility towards environment, towards society, and towards the regulatory authorities, and thereby it should make sure that it is providing a proper disclosure for ESG also. It enhances transparency, and in case if it is not under control, then the government, then the particular society stakeholders might take some action. They might compel the management that okay, this is not right, this might not be sustainable for the company, okay, and thereby please change this and this, etc. Clear? Coming ahead, last, that in practice it has to be done. We'll take a quick example. Talking about S1. If I talk about S1, let's take an example. For example, ABC company is there, ABC Corporation, and it is providing S1 disclosure. So thereby they have to provide environmental risk and opportunities. That okay, what are the risks and what are the opportunities in the environment? Whenever they are scanning the environment, okay, it is an advantage benefit, because when you're providing disclosures, you have to make sure you review your environment, thereby the entity also, okay, identifies risk and opportunities beforehand. If they are identifying risk, then they might take proper measures to mitigate the same. On the other hand, if they identify any first mover advantage, any other advantageous opportunity, then they can take some actions and try to capitalize it and try to take most out of the available opportunity. In case if this particular disclosures are not made, they will not review their environment, they will stick and be only concentrated on running their business and profitability, there might be a chance that they might not be able to observe, they might not be able to identify risk and opportunities in time. So it's an added advantage. Also, as a part of the disclosures, you have to provide that, okay, what are the risks and what are the opportunities in the upcoming surrounding environment. You have to talk about climate change, specifically countries, specifically companies working in those countries, okay, which are highly climate changing, I would say, factor is there, where which are, okay, let's read this. For companies which recognize climate change as critical business risk, in case if the company recognizes that climate change is a critical business risk, then this has to be disclosed in climate change. What is the opportunity? For example, investment in renewable energy and energy efficient technology offers, firstly, they offer cost saving. For example, instead of coal energy and hydroelectricity, you are choosing solar power. Okay, so it's a better one. It cuts your cost, as well as okay, cost saving opportunities, and enhances ABC Corporation's resilience to regulatory changes such as carbon pricing. So, as you know, Apple company has been actually right now, okay, is being said that, okay, they are not following the carbon rate, okay, carbon pricing, and thereby they were required to reduce their carbon pricing, and therefore they have introduced a C-type charger, okay, and they are introducing multiple more things. They have said that, okay, we will not sell chargers along with our mobile phones. So they sell chargers separately. For if you talk about any other Android phones, they generally sell their adapters and data cable and the charging cable, okay, along with the mobile set. Whereas Apple has chosen to not to sell adapters and chargers, okay, along with the mobile phone, because it says that already existing chargers are there, and thereby they would decrease the consumption of chargers by not selling it along with the mobile phone. And they say that this is our initiative to decrease our carbon footprint, carbon consumption, okay, carbon emissions. This is their initiative. This is just a very simple famous example. So herein they have to provide a disclosure that, okay, if it is very critical, they will provide a disclosure, and in case if they are finding any opportunity, cost saving, and that will also be mentioned along with this particular disclosure regarding environment and opportunity. Next is governance and oversight. What is board's oversight? What is board's perception? Committee oversees sustainability related risk. Who is checking this? Who is monitoring this? Who is making sure that the company is applying and complying with all those opportunities and risks that have been identified? Who is complying that? Who is making sure that sustainability risk and opportunities taken care? So there are board of sustainability committee which oversees sustainability related risk and opportunities. There are separate set of members who checks that, okay, what are the risk and opportunities going on. Executive accountability. Chief Sustainability Officer is responsible for implementing sustainability strategies and reporting on progress of the board. What are the strategy and resource allocation? Like, okay, ABC Corporation strategy includes reducing greenhouse gas emission, okay, by 30%, okay, by 2030. So they might tell their aim, their upcoming vision, okay, their upcoming uh, again vision, mission, that okay, our vision is to reduce it this and this is our promise, and thereby they will take some steps. If they have not identified the risk and opportunities, then they might not commit the same, they might not improvise the same. Increasing reliance on renewable energy and not on the non-renewable energy. Circular economy initiatives such as recycling and waste reduction. Next, capital allocation. Okay, what amount will be allocated towards this activity? Like, for example, in our normally when we applied normal standards and companies act also in India, we generally provide a allocation that okay, this amount is has to be compulsorily invested in regard to corporate social responsibility. This is very similar to the same. These are only related to international, and those were our Indian standards. Okay, because of which we used to do CSR activity. So what amount is planned to be invested in regarding our corporate social responsibility regarding renewable energy. So earlier we talked about what is our plan, what is our vision, what is the risk, what are the opportunities. Okay, it is having in cost saving, it is helping them to rely on new energy. Now they have said that okay, what is their source, and now they are saying that okay, what amount has will be allocated towards this renewable energy adoption. Metrics and targets, you have to talk about numbers. Carbon emission, what is their carbon emission, what is their carbon footprint? Scope 1, 2, 3, for example, 2023 emission was this and this, and now target is to reduce it by this and this amount. Okay, you have to actually tell your figures. What is your energy consumption, current consumption, and what is your target? Got it? So you have to tell about your actual numbers regarding carbon emission, energy usage, etc. Next, what are the climate risk assessment? For example, ABC Corporation has conducted a scenario analysis including a 2-degree climate scenario to assess the impact of regulatory changes such as carbon taxes, physical risk like increased flooding, or on our operation. So they have to check, is there any change coming up, and what is the effect, how will it affect our business? Mitigation measure, how will you solve it? Identify problem, you have identified problem and you are trying to provide a solution. Next, lastly, we'll talk about employees' health, that is social and governance practices. Like ABC Corporation is dedicated in improving workplace safety and has implemented comprehensive safety training programs, achieving 50% reduction in workplace injuries. So they can tell the existing plan that okay, they are providing some insurance, some more safety measures, etc., okay, in the company in order to make sure that the employee health and safety is under control. Diversity and inclusion, we aim to include the diversity of workforce, okay, setting a target of 50% representation of women in leadership position by 2025. So it can be in multiple scenarios. IFRS S1 says that especially listed companies and any company who wishes to go ahead and voluntarily adopt, they must provide IFRS S1 disclosures regarding sustainability issues. These can be the major headlines, okay, major pointers for which they can provide a disclosure. You can provide a simple conclusion also as part of your disclosure that the company is aiming towards long-term values. It is not related and not only talking about and thinking about just current year. It is not focusing about mission, but instead it has a very huge mission, which in one sense has this and this benefit to ESG, environment, society, and governance. Addressing the risk and opportunities arising from environmental and social challenges, we remain committed to achieving our sustainability targets. You can promise in the end that the targets that have been set, we are actively working on the same. We have active strategic plans and we are taking it seriously and transparently reporting our progress to stakeholders. So this is a clear example of S1. This is a clear example of S1. The same will be uploaded on the application as a free free, I would say, document. You can download the app and you can even easily download this particular uh, document also. Also, the same can be taken up from the online, okay, from online method. You can easily download it. In very similar way, we can also provide disclosures regarding IFRS S2. So, as a conclusion, IFRS S1 and S2 have been introduced by ISSB, but it is not compulsory, but it is highly encouraged to apply. It is compulsory in the countries which make it compulsory, that okay, in these countries the companies have to apply. But in practice, it is highly expected that listed companies should provide IFRS S1 and S2 disclosures. I'll provide the link, okay, in the app itself. I'll provide and upload an example of IFRS S1 and S2 in the application itself. You can download it from there and you can use it for reference in case if you need to provide this particular disclosure in as part of your company. Also, if you are sitting for any interview questions, okay, then these are recent developments. As an accountant, you should know we can expect an interview question regarding IFRS S1 and S2 disclosures. These are very hot topics. So make sure you read them once at least. I hope you liked the video. It was informative. Thank you so much. In case if you need any sort of other videos, make sure you make a comment down below and let us know. I'll get back to that topic as soon as possible. Okay, and see you inside new videos. Also, there is a quick free WhatsApp link given in the description box. You can join that. The new videos, the new doubt sessions are added over there. We share link to join doubt sessions in our WhatsApp group. So in case if you need any sort of free resources, free doubt sessions, then definitely that WhatsApp link will be very helpful. So make sure you check out the description link. This is Swati Gupta, Chartered Accountant. Thank you so much for watching. See you inside the next video. Till then, take care, be safe, stay tuned.